unmute, share your screen, and welcome back to F.A.C.E, buddy.
Hey, hi Dale.
Hi, Patrick. How are you?
I'm doing great, man.
All
So happy
right.
to be back on this world famous show you guys have there. It was just so much fun
World
listening
famous.
to Blake there
Yeah.
talk charts there. It's I should do this more often.
Yeah. So, yeah, pop in anytime. You're always welcome. And all right. So, a billion liability and gold adjusted for inflation. You know what I wanted to start off with? And maybe we could go to exactly what you're looking at. These look like point and figure charts here, Patrick. You guys have bad charts, man, you and Kevin. So that spike flash crash that we had a couple of Sundays ago, I know you guys use like arcs and circles,
Yeah.
and I was wondering if, just a spike, even though it came back, gold more than silver, did it affect your charts when it did that, or it
Well,
held right where it had to even though it spiked? Okay, there it is. All right,
that's one of
so there's
mine.
gold. Yeah.
Yeah, so it all depends on the time frame, right? So let's
Yeah.
say I know right now, because whenever you start a downtrend, what you start
Yeah.
looking at, the power of the arc, essentially, it's just a visual representation of a downtrend, like
Yeah.
the arc going down. And then it's this like the cycle that happens all over and over, right? Then after that, the downtrend is less and less acute. It's starting to be a base. And then when you start hitting the right hemisphere a few times, eventually that's like the beginning of an uptrend. So you could use a moving average, would probably give you the same type of thing. But in an arc, it's like just the mathematics of it, the symmetry, it measures really the energy in, the reverse symmetry move out.
So that wick actually it never closed outside of the arc. That's what I was thinking. Well, you could adjust it any way you want, but
Yeah.
based upon what you had, what were you thinking when it was cracking the arc? You were probably asleep, but when it was
Well,
happening,
on the smaller time frames, honestly, Dale, it's like the smaller time frame, like with any trading tools, it's less and less reliable, right?
right?
The patterns they could get overwhelmed by the higher time frames, hidden resistance. So let's say, look, this is like the daily chart,
Mm-hmm.
and but if I would have went on to let's say the monthly chart, I'm not even sure. Like, do I have a? We're not even starting to carve out a right hemisphere yet. So let's say I'm
Okay.
based on monthly closes.
We haven't. There's not enough time yet for it to get to that
Yeah,
side of the arc. Does that
exactly.
imply we can move sideways for a while longer into the arc?
Exactly. Yeah, that's exactly what
Okay.
it means. You can
All
move
right.
sideways, you can move down. So usually the angle, yeah. So we could haven't actually, like, you're exactly right. Like another month there, it could go up and then retest a little higher. So, and sometimes there's not even arcs. You want to have two touches of the right hemisphere to have a valid arc. And one of the most if I could zoom out, one of the most popular arcs there that if you would have spotted it early would have give you like a huge. It's this one here. I drew it really fast, but the left hemisphere, 1, 2, 3. I could probably
Right.
tighten it a little bit. A lot of touches. So you know
Yeah.
that left hemisphere, it's perfectly uh, well drawn out. Then you use your classical TA, you put in a breakout line, one touch, 2, 3, a bounce. Like this candle, it was like go all in. The low risk, high reward is right
Yeah.
here, Dale. Right
Yeah. I
here, when the
remember
arc completes,
1350. Yeah. Yeah.
when the arc completes, it's over. Like the arc's destiny has been fulfilled, and you, it's not time to try to enter here, because what happens after an arc? Either a a handle, or it does maybe a pull, flag pull. You don't know anymore what's happening at this stage, right? You're above all-time highs. You don't know where people are going to want to sell, right? The people who bought in here, they're going to want to take profits, creating overhead resistance that you couldn't imagine was there. So the low risk entry is here. And now this is all this churn, and actually that looks like a descending bullish expanding wedge also forming right here, which we kind of had here and back in 2008. I've been looking at this a lot of times because a lot of people right now, they're wondering, is this a top? Is this what we had back in 2013, like 2011, 2013? That's like the biggest question. And right now, the price construct, I'm looking at different ways. It kind of looks like this bullish continuation pattern, right? Even if the price action goes down severely, it's still a bullish pattern as soon as it breaks out above its look at a beautiful breakout, retest, and then shot away. And pretty much that's how I see gold right now. Gold has to survive. It has to go close above this line right here. And once it closes above and retests it
Where's that come in? 1875,
yeah,
around 1880?
let's put in this is where we're going to judge. I think this is how we're going to judge the gold bull market there. If it could really climb above this break line, and if it can close above this one, it's a good sign. But ultimately, you're not out of the woods until you close above 1875. Because look at what happened on this top here. It tried. So I think we're kind of in this rally here. We're going to try to go, but this echo bubble high is not enough. So even if we close above 1900, you still need to overtake these monthly defined highs there. So hold your breath, guys.
Yeah.
I'd say if people are on the sidelines for gold, you have to wait it out. You have to wait.
Just so like would you buy pullback to 1750 right now? It looks like that's where the arc might come in after the candle you have there on your monthly. Maybe you could go shorter term to see if 1750 40 means something. That's what I was thinking, is that I didn't buy the washout. I thought it was like, sometimes the market gets hit like that. It's like being in a car wreck and it's in shock and it has to kind of fill out, reset that huge candle. And gold rallied back and got it all back. Any feeling on the fact that the gold silver ratio has been rising again? I mean, only 23% from the high at 110, but we've had a nice little pop in the gold silver ratio. And I know that eventually you're looking for outperformance from silver over gold. I'm wondering if this is a good spot to think about it, or there could be more left on in it. So what are you thinking? I see the chart there.
Well, I'm always going to overlay it with the DXY. Often they both go up at the same time. And
I didn't know that.
Yeah, and even look, I could even add the VIX. So in risk on environments, these three, the VIX, it's like the three horsemen. Well, I think it's supposed to be the four horsemen, but if the VIX, the DXY, and the gold silver ratio go up, it's super scary. We might be close to a U.S. equity crash, something really scary.
Yeah,
we had it here back in 2008 when they all crescendoed together. We had it in March. I'd probably have to zoom in on the daily chart to see March. But if this is subdued, so if the gold silver ratio starts turning back down, we get a wick. If the DXY, look at that. The DXY for me, it's just doing a back test of a critical breakdown line, right? 1, 2, 3. Back test. If this, even if it comes and touches here, gold silver ratio comes up even a little bit more here. I think even there's a back test. It could even spike all the way up here. And the VIX can spike up. But if that gets sold into and we start turning back down, that's going to be rocket fuel for precious metals and even equities. They're gonna enjoy that. But on the turn, off the bottoms, precious metals, they're gonna outperform the U.S. equities. They're pricing in all this monetary imbalances or whatever was done there to subdue that VIX. But right now, it's still a slippery slope.
Okay. Patrick, I know that you're really known because you kind of broke out with your super cycle work in silver. But I also know that I've read you have some type of trading system that you're also implementing. for your subscribers. Does that include other instruments, asset classes like stock indexes? Are you doing that kind of work now?
Yeah, it could be any instrument,
Anything that moves, huh?
anything that moves. So that's it's like based on Stan Weinstein's stage analysis. So I don't know if you have,
Okay.
were you checking a ticker in particular? We could,
Well, like, the S&Ps,
okay.
what your look is like on NASDAQ or S&Ps with us at new record highs. Do you have a look
So,
on those?
yeah, let's do let's look at Apple.
Oh, okay, good. Yeah, I'm following it.
So right
Looks
now,
like a
with
3 drive to me up here. See the last 3 highs? That's a 3 drive to a top formation, possibly. See that?
these ones,
Yeah, 1, 2, and now the last one is
okay,
3.
yeah, that
Okay,
one looks like I even see oh boy, yeah,
looks bullish, huh?
yeah, especially if it breaks to the upside, it should be violent. So when these
Okay,
patterns, if they're not contained, like even like um, those bearish falling, rising wedges, which usually should
yeah,
break to the downside, when they break
yeah.
upside, it's you usually have some crazy action that goes up, and
Throwovers, yeah, throwovers above wedges.
it goes. So let's
Yeah.
say here, I want to know if I want to go. Here at the bottom is the Mansfield Welcher Strength Indicator. So as you outperforming, so let's say Apple's outperforming the SPX, that's a very good sign. You want to be always in an instrument which is outperforming its peers. If you're
Well, do
above
you
an
consider
incline,
that it is? Because it was late to the party while everything else was rallying.
well,
And there are a lot of things making new highs, S&Ps themselves, and well, on your weekly chart, yeah, we're making new highs. Anyway, I thought this might be a terminal, uh, the 3 drive to a top formation, diverging on the last couple highs. Doesn't it looks bullish to you though? Would back under 140 change your mind on Apple?
I think so. Check it. So here it seems to be carving in a pull flag.
Yeah,
So if that breaks to the upside,
yeah,
should have a pretty violent move. Yeah, under if it goes back, if it goes back at 140,
yeah.
then this is in danger. You're closing below the 10-week moving average, and if ever it closes below the 30-week moving average, then you could be in trouble.
Okay,
What am I seeing here? Yeah, it's another rising.
yeah,
Look at that rising, falling, right, bearish
yeah,
rising wedge. So eventually, if that line breaks down, the target is the beginning of the pattern. But
right,
if it breaks to the upside, yeah, you have the violent move up, and then once everybody's trapped, then you have a
right.
false breakout, and then as violently as it went up, it goes back down. So,
Okay, so we could still have that acceleration blow off here,
yeah,
melt up.
yeah. Look,
Okay.
do you have relatives asking you to buy tech stocks yet?
No, I'm looking for top in Nasdaq up here. So that's why I'm looking at some of these. I think that because I think rates, they handle higher rates less well
Yeah,
than almost anything out there. Banks love them, but big mega cap tech does not.
no, and oh man, it's such a slippery slope because I'm looking at those rates to increase, but it's everybody. I don't know. It's like
Everyone's looking for that, aren't they?
so. I'm wondering, are we contrarian now, wanting the rates to go up or thinking they're going to go up, or this could drag
I
on
know.
for another year, 2 years, 3 years before they can't even go up.
Yeah, what tempers me is if we do get some type of correction, 10% or so in the stock market, I actually think it'll be 30. But if we get that, that's not going to equate to higher yields. Yields will come back down. So the Dow hasn't made a new high since last week. It's one of the few but I know people looking for 35.9 or something like that before it puts in the top. But I mean, look at how long this advance has been going on, Patrick. Doesn't it feel like we're, you know, oh yeah, oh you you're taking us back to the early 1900s.
Oh yeah.
Okay.
Well, I just wanted to show that this is the parabolic melt up it had in 2028, 2029. And right now, this
1929.
one, two, blow off top, and then corrected
Yeah.
the down the channel. I'm just going to
Yeah.
put a angle
Those,
trend line,
yeah.
and we could. What happened to my line? Okay, here. But the thing is, I always forget, and people forget these are indexes, right? So the weaker stocks, they're rotated out, right? There's some.
They threw them out, especially in the Dow.
So it's kind of skewed. It's like a bullish bias. It's like it's a trading program in itself, right? Like the rotating type of trading systems where every month you take out the weakest sectors and you put in the stronger ones.
Uh,
Here you see, look, blow off top, hit the bottom of the rail. So this is a beautiful, beautiful channel that we've had for forever, right? And you can even here, look, I could probably draw one very close to here. So I'm expecting a blow off top through that upper channel here. So maybe this year, something that is really going to trap a lot of people, and then a pullback to at least retest this median line here.
okay.
But nominally,
still blow off territory we're in, melt up territory. Maybe that's how it has to end.
Yeah, it could definitely go a little crazier there until this comes up above. The markets, they love doing that. Like, just exaggerate, seep through important resistance, an important line. But by the end of the year or the following year, it says, hey, something's wrong, and then it closes back below. People, they want to take profits, etc. And then it could be just a cascade of events that bring it down until this bottom line here. But nominally, Dale, the numbers, it might go on forever. Like, if you don't adjust this for inflation, in 10, 20, 30 years, we're going to be at 100,000 Dow, it's going to go. The numbers don't mean anything practically as you go forward, right? If you don't measure it in your purchasing power or in a, like, let's say you have to divide it by gold or divide it by silver to measure it into something more meaningful.
Okay. Is this a Bitcoin break we're getting today the beginning of something, or just a little correction after a great move from 30,000?
Let's check. Yeah, I see it's correcting today a little bit. Yeah, so it's always tough once you've had a strong top where you were stretched away from that moving average, and then everybody's sold into. You have a base information, and when you try to regain these higher levels, there now you're running into overhead resistance.
Yeah, supply there.
Yeah, that's it exactly. So all that's supply. So you have to grind through that. The easy part was going through the fast fall. You could see here in the volume. So this is all the transactions for this price action, creating a nice base, but it went down so fast that there's like a vacuum here. Not many people bought on the way down. So as it goes back up, there's not many sellers here. So this was the easy part, getting up to here. And if you could get through this congestion area here, you have another vacuum all the way to 56,000 right here. I call these volume defined walls. So if you forget the price action and you just look, let's say I close that and I remove this, remove that. Your game plan could just be essentially playing these volume walls, right? As soon as you start sliding up above this one, then your next target is this area here. If you pass through that, then I call it's like a thin zone, a vacuum here. Then you zoom up all the way to 56,000. So you gotta keep a close eye. And right now, it's if you can't make it here, same thing on the way back down. Then there's a vacuum on the way back down. Not many people are willing to buy here, and it's gonna come and retest the top of that box right here. Hey, where's my box?
Right, if you could make it here, you can make it anywhere. New York, New York. How about also oil, Patrick, has been two-sided trading. Looked like we had a breakdown under 65. That little double bottom it took out. Now it's back above it. What do you do with the market like that? You see what I'm talking about? We had that little double bottom at 65, and then not going back that far, but now we're back above it. It looks bullish to you as well.
Oil,
Monthly.
that's why if you have to always zoom out, because if you're too close, 1, 2, 3, this is the fourth touch of this breakout line. So this is kind of and now it's trapped in what I call a bullish transition zone. So 1, 2, 3, 4, and now on this breakout here, it retested it, bullish trans above inclining 1 and 3. So what's just happening right here? It's just a consolidating.
Gains.
It's letting those moving averages catch up, I think, here, Dale. And if it doesn't, it could even go retest even that breakout line, and that would still be bullish, right? Above the inclining 3-year moving average, or it's starting to turn up. So it could stay here for a while, 2, 3, 4, 5 months. Just consolidate here, as long as it doesn't close too long below the 1 year or at all, because in the bull market, you want it to stay healthy like this. Or it could even like do this type of scenario here, come and retest at 3-year. Then you have a beautiful, beautiful launching pad to break out finally of this. Because this is the thing that traps everybody. It's every time there's a violent move. And even I found that trap. I think, oh, this is it. This is the move that's going to break out above these huge patterns. But what often happens more often than not, it needs time. It needs to go here. Right. Then after that, needs to do a higher low right here. Yeah. And then how it zigzags a little bit. And then when nobody wants it and it's coiled close to that breakout line, this is when the move happens.
So it has to move sideways to build up compression for the move.
It would be super healthy. Look, this is like since 2008, man. So if ever we break out of this move, Dale, that's some crazy inflation we're having. That's higher yields. These are all the higher yields, higher inflation crew there, which I'm angling that eventually this pattern is begging to have a breakout to the upside. Yeah. But we have to be patient there. Do
you track uranium? Last year I started talking to more and more people that were paying attention to uranium stocks. It's part of the Green Deal, even though, you could have the China syndrome. So uranium's looks pretty good. Just a little pullback here to support.
Exactly. All right. Okay. These are the uranium ETF.
Oh, hold it. Let me get my Geiger counter.
I should put this green background. It's dangerous.
Yeah. What are DJ? What are CCY pairs? What are those? Are you talking about the yuan? Oh, currency pairs. Okay.
Yeah, I look at currencies all the time there, like especially the odd USD that's critical for the inflation or bull market cycle for
it's China too, right?
True.
Aussie, copper, everything. Well, so we've had a nice little pullback. Do you think it's over? I know some guys looking for about 66 long term. That probably would equate to what you have on the left side of the low. Maybe for a right shoulder or something like right that. Here, 66. Yeah, well, and then look to the left, and it looks like it was about 67.
Because this could still be bullish, right? Building a flag, as long as it's above this critical breakout line, there's like day traders are going to be scared out of their mind. Well, what do you mean I'm going down to 66? But as a position trader, as long as you don't make a new lower low, this is perfectly bullish. And look, there's a 3-year moving average. We could have these type of wicks, below that 3-year, but I wouldn't expect it to close. A wick down here, man, that would be an insane buying opportunity there.
Okay. All right. I like it. So what's the best way for people besides, on Twitter too, at Bad Charts 1, and your website, please. It's, best way for people to follow you. There you go.
Yeah, NorthStarBadCharts.com, guys, with Kevin Wadsworth there, Northstar Charts, and we cover pretty much everything, taking requests. Even here, I just did this nickel chart. That's why I'm looking at all these commodities, and either they have a little bit of time to do it like a type of blow off top, but after that, I feel like the pullback, what we've been seeing in the currencies, etc. it could be some type of some reset there, and as maybe inflation expectations they kind of get subdued a little bit. In reality, maybe sinks in more, and yeah, we got
Maybe
to.
that what we're getting that now, a little bit of a pause in the inflation scare now before it reasserts itself.
Look,
Could that be happening?
I think so.
With like
Look at
copper
gold.
down,
Yeah,
it rebounded recently, but Aussie down, that maybe we're in this period of it pulling back. Yeah, copper came back pretty good.
and
But
it,
it still may not be ready to blow. What do
no,
you think?
exactly. Could be, look,
Needs
copper's
time.
it's done legendary runs, and look at these halfway pullbacks. Like
Yeah,
this could be sufficient, maybe one more month, and
yeah,
gold kind of led the way. I think when gold restarts going up, it's going to help. Gold broke out first in 2019, and after that, all
yeah.
the commodities had their turn. So as these commodities cool down and gold gets ready to go up, after gold breaks out to all-time highs, then I
That's
think
interesting.
they're going to finish their pullbacks. All these
Okay,
commodities.
gold leads everything, in
Yeah.
your opinion. All right,
Yeah.
that's a
All the
nice
time,
headline.
every time.
All right, okay. He who owns the most gold rules. So gold leads. I'm looking to maybe buy a pullback at 1740, 1750 in gold if that happens. Any thoughts on this virtual Jackson Hole meeting,
No,
Patrick?
no,
No,
all noise.
yeah. All right, so I usually put up a Johnny Lang song on Fed days. Title of the song is "Lie to Me, Tell Me Everything's Okay." So appreciate you being here, Patrick, very much. And guys, I think that Patrick and Kevin produce some of the most interesting looks and charts using arcs and circles and things that I never even considered using. And they're a definite follow. Do you have any kind of trial that listeners could take advantage of for a week or a month where they could check out your work, or
Well,
no?
honestly, most of my big picture charts, the techniques we put there, they're all free on Twitter.
Okay.
On the website, it's more like we have signalings like for the trading system for stocks that we really track for maybe swing traders or faster term traders. We even have a gambler's pick section where it's stocks there that are hitting, let's say, the right hemisphere of the arc for the first time, and nobody wants them. Companies
Oh,
like that don't even have like mining permits, but
okay.
we don't even care. We just look at the low risk, high reward, and all those are on the website there.
Are you doing altcoins in the same fashion?
Everything. Yeah.
You
So
do everything. I
yeah,
don't know. How do
Kevin's
you do
covering,
it?
let's
How do you
say,
do everything?
here, like he did IOTA, he does
Yeah.
podcasts covering 20, 30 cryptos in one shot.
Polka dot. Yeah.
Yeah, all these
Tezos. Yeah.
if there's an arc like this one here, I don't want
Yeah.
to drag on too long, but these are the type of opportunities. Not here, guys. Arcs at the end, it's the end of it. That's the target's reached. You want to get in on these bounces here, right?
Yeah. Interesting. So bad charts, because they're not bad. They're good bad charts. Bad chart ones. Patrick, Karim. Thank you, my trading warrior brother, for
Thank
being
you.
with us today. If
Oh,
gold was a James Bond movie, okay.
yeah. I don't know. Sometimes,
Moonraker. Love it, man. All right. Thank you so much, Patrick, for dropping in. I'll get a hold of you on Twitter, and really appreciate your work and Kevin's work. I think you do a great job for the FinTwit community. Thanks again, bro.
thank you, sir. Take care, guys.
All right. Patrick, Karim, follow his arc, follow his circles, and I'll see everyone for TGIF tomorrow. Good hunting with the virtual Jackson Hole in the Wall conference. And remember, don't just count your arcs or your circles or your trend lines or your crypto or your silver coins that you're stacking or your bars. Count your blessings, and we'll see everyone tomorrow. Adios. People are thanking you. They're saying nice analysis, Patrick.
Thanks, guys.
Good
Appreciate that.
job once again. You never fail to open people's eyes to new ways of looking at charts, Patrick. Thank you very much.
Thank you.
Adios.
Bye.